Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we talk about the crypto crash, stop losses, and much more.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh, honey.
Produced by Vinny.
and Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, January the 12th, and this is the first day of this week. Yesterday on Tuesday was the first real day of this week where we saw, a little recovery. I mean, it seemed like all the small caps, all the FinTwip plays, everything was kind of crashing. I mean, you saw everyone saying this is the day traders market. It's in exactly the swingers market. Saw a lot of people give up a little too soon, maybe too late, and finally go kind of all cash at the very bottom. That can be or what seemed maybe the very bottom. And then you also have Bitcoin going under 40K for the first time in forever and over the past weekend. Is it buy-in time or is it all cash time?
So the one thing I will say about the cryptos and Bitcoin is that we knew before that they made huge moves. Some years they would go up 300% and down 70%. It's nuts. It's just because Bitcoin hit 65,000. So a drawback of 20,000 was more than Bitcoin was worth 2 years ago. And then the other part to this is that before it really felt like everybody was like, yeah, screw it. I'll buy one Bitcoin at 1,000. Screw it. If you were a big baller, you were buying a Bitcoin at 10,000 and it was a speculative investment. Now it really truly feels like people are all in on this thing, taking we've heard stories of people taking their whole IRAs, their retirement accounts, and putting it into Bitcoin. It truly feels like it went from a speculative investment to oh yeah, like one of those things where your barber tells you oh yeah, this is a sure thing, bro. This thing's gonna go to $1 million. It's gonna take over the dollar.
Yeah, the fact that some of the most high paying jobs, being some athletes and stuff, are just going full. Yeah. I don't know if any NBA players have done it, but once you start seeing those $60 million checks go in, those yearly salaries go in for a all NBA player, there'll be some big money in there, even more big money.
Yeah, definitely. And the whole point is to decentralize. So is it really decentralizing when you're just having more whales essentially come in, even though it's not 3 or 4 years ago, where you had only big ass whales that were billionaires, but it's effectively instead of 1,000 whales, you're just bringing in 10,000 smaller whales. It's so the whole point, the whole argument about decentralizing, it kind of becomes obsolete when you talk about people buying $50 million, $60 million worth. And then the other thing that we've really seen change over the last few years is that before, the whole point to this was that Bitcoin was supposed to basically be reverse of the dollar or be basically a hedge to inflation. But SPY goes down and Bitcoin goes down. SPY goes up and Bitcoin goes up. I see some analysts calling for SPY to retrace 200 to 300 points within the next 3-4 weeks. And when you ask them, hey, like, what's this mean for crypto? They're like, oh yeah, it definitely doesn't bode well for crypto. Then what the fuck is the point of crypto? Like, what the fuck is the point of Bitcoin if it's just going to track SPY anyway? That just makes it effectively a financial vehicle that tracks SPY just in a different kind of way, just with like a high beta. So I don't know. That's like the real difference that I've seen inside the past 3 or 4 years is that people are panicking more on these dips. It was down 70%. People were like, like 3 years ago, people were like, oh no, like buy the dip, pussy. And now it's like Bitcoin's down what? From 65,000 to 40,000. Well, math is hard. What is that? Like a 30% dip?
40%.
Yeah, 35, 40% dip. And people are like literally panicking in the streets. I mean, now, and now you have billionaires who are coming out saying that they put half of their net worth into Bitcoin right here. Not when they could buy it 3 years ago for 100 of the price, but right here at 40,000 of Bitcoin. Like, that's wild. Like, there's some of these billionaires who could lose literally like hundreds of millions of dollars. And at the end of the day, of course, nothing's a sure thing, but I don't know. The argument that it's supposed to go inverse of the market and it's supposed to be hedge of inflation, but then it's the same thing that tracks the market. It feels a little odd to me and a little different than the original scope of Bitcoin when I first heard about 3-4 years ago, 5 years ago.
Oh damn, you're a new guy to Bitcoin, dude. We were buying weed with it in like 2012 with it. I could be loaded right now. I was paying several Bitcoins for like 14 grams of weed.
Wow.
That's
wild.
Yeah.
I have I don't, but I know a drug dealer who has like 5 million or allegedly 5 million, respectfully and allegedly, like 5 million Bitcoin because of what you basically just said. I mean, I was a 7th grader, so I wasn't really buying weed. I mean, now I buy weed all the time.
Respect, dude. That's dope.
I'm
the
hard. Weed man.
The weed man?
Weed boy. Yeah. They call me the weed man.
That's sick,
but back in 2012, I was just getting into the game a little bit,
Oh, okay. I feel that. I went to a private school. We got hair follicle drug tested in high school.
Are you serious?
Yeah, it was wild. Not something you'd expect. And as I grow older, I realized how wild that was. I was like, dude, even when I was on probation, we didn't have that.
To be honest, that's crazy. The fine gentleman of Alabama.
Yeah.
Look at you now.
Look at me now. Okay, well, going on to stocks a little bit, it seems like Monday was a brutal beatdown. I said it seemed like that this was kind of like a make or break. It sucks. It kind of all happened so fast on Monday. The people that, and a lot of people were talking about going heavy cash, towards the end of last week. Were those kind of the smarter ones? Are they getting back in come Tuesday? Because it seems like a lot of these reverses are starting to happen. Or is it still kind of time to sit on the sidelines and watch what plays out?
Yeah, I think even if you're a swing trader or a day trader, I still think in terms like cash is definitely the safe position right now. Because although there's fall through in the market, it's totally chop steady. I mean, I know like me personally, I give up half my day in like 1 or 2 plays, which never used to happen. That's just because it feels like a big grind to make any money. And it's really easy to lose money right now. So I think it's one of those things where, it's still it's still better to be a safer trader right now and just, treat it like how we usually treat August. I mean, there's some horror stories right now going on about traders being wiped out. I mean,
this is the worst month. Well, I guess early April would be the worst one, but January is a terrible month to blow your account. You got taxes coming up and letting it affect your psyche. Like if you lose a good bit of your account going into December, okay, whatever, tax write-off, then January comes and you take another big hit. And you're like, dude, you're thinking about taxes. You're like, once I pay my taxes, dude, I'm going to be even lower. and you're like, can I even trade? And I now have to be careful. It's like having 5 fouls in a basketball game. It's like you have to play careful, but at the same time, you want to play hard and you want to make sure you're doing everything you can for your portfolio. But at the same time, if you slip up, you're not going to be able to pay your taxes. And it's a pickle to be in.
See, that's the thing about trading is that when times are good, times are good. And I don't want to say that we kind of talked about this, but I feel like when the market was pretty hot in October and November, we were kind of saying like, hey, we got to start preparing for the cold months now, because when they come, they will come and they will suck. And I feel like that's kind of where we're at. I mean, we are hearing tons of. We knew that the other shoe was going to drop. I mean, we had 16 months of pure insanity in the market. I mean, pure insanity. And we hadn't really had like nobody was really tested. I don't want to say like people weren't tested, but it felt like every single storm that we went through only lasted maximum 6 weeks. And then it was like, oh, back to making stupid gains and compounding the money. And we haven't really had a market.
Yeah. And those down periods don't feel so bad whenever the next week you're just making hell racks. Yeah.
Yeah. So the other shoe was bound to drop. We really didn't know when it was going to be, but this is kind of what we're in. And now you're seeing it where it's like, blow ups after blow ups. And so, listen, the biggest thing that I could say is that just use like 10% of your account right now. Try and make 10% of try and only use 10% of your account and just keep enough to like keep the lights on. This is not a compounding account market. And that's fine. Every month, you don't have to do 40% of your account.
Yeah. No, I mean, you always got to wait and be patient for those times. And what you're seeing right now, I feel like is it just seems like one of those times where if you're right, you're right. But more of the time, it's just like you're making the wrong decision and they just add up. And those paper cuts eventually add up.
Oh, yeah. I know for me personally, like I've taken more than enough. And that's what I mean is that it's been a grind to make any money recently. And it's been really freaking easy to lose something. I mean, like even today's Tuesday, the 11th, I was in this ISIG. I was up like a good buck on it. And all of a sudden it knifes like $1.50 on me. And I go from up a nice buck to like red. It's like, holy hell. Like, where the hell did that come from? I look on the tape, it's like a 7 million share dump into the bid. I'm like, where the hell did that come from? So it really feels like a grind to make money right now. And it really feels like it's super easy to lose money. And so set that daily goal. And I know that we talked like at the beginning of the year, like, go after it. And I totally believe that you got to go after it. But that being said, like, let's not be freaking stupid.
Yeah, you can't chase your account value, your old max account value. Like, forget your account was ever at 80K and accept that it's now at 65K. And you're going to have to take it slow. Don't try and get back to that number you were at just because it's gone. Like, it's not exactly last year where, there were just all these opportunities. And it blows because having a good January is that beautiful, beautiful like buffer that you need to kind of make the rest of the year not feel exactly like, it's the worst ever. And you have taxes taken care of and you have this bigger account and you're able to go into the new year with just this ability to just, hey, I rock. Hey, I've got more buying power. I'm a better trader now. And I can just rack all that up. Instead, I have less buying power. I'm a terrible trader. And the IRS, may be arresting me for 20 years because I can't pay my taxes.
Yeah. And well, and that was the thing with so we had the insanity with COVID and everything recovered plus some by the end of December. And then we went into January and by a week, like in a week or so, started all the GME AMC madness. And for 2 weeks, for the 2 weeks in January and all of February, it was like fucking madness. I mean, everybody made their entire yearly goal in like a month. And then it was like, okay, even though the last, like, let's even call it the last 6 months of the year sucked. It was like, oh, whatever. Like I made 600% on my account in February and January. And now I'm only up 300% on the year. Like if I only did that every year, like that'd be great. You know, like that was like the mindset. But when you take out those isolated months, I mean, I did okay. Like I know me personally, like I did okay. I didn't kill it. And I feel like that's probably a fair assumption to say that that's probably how everyone else kind of did as well.
Yeah, I mean, having so many new traders in 2020 that, I mean, and it is by no means a joke to say tons of people, 10 to 20,000 their percent off of their, first year of trading in 2020. People put in like $5,000 and easily ended the year over $100,000 off of what could have just been a few trades. I mean, you were having that chart that was like, after $1,000, all you need is 1,100% plays to get to $1 million. Like thinking about that now, I'm like, okay, well, where the fuck are you finding 1,100%ers? Because we need to talk more. But like 2 years ago, that was, dude, you can alphabet soup it. You can just stir it up and be like, this one's probably gonna rock.
Yeah. I mean, I personally remember this podcast, or not necessarily this podcast, but like our friend group alone, the ones that like we used to text and stuff, we were averaging an 1,000% runner every 5 weeks for 6 months.
Mm-hmm.
Like that's wild. Like that's crazy. Now it's like something runs 30%. We're like, oh shit, fuck yeah.
Dude,
yeah,
fine.
and listen,
I love a 30% runner.
Yeah. I mean, 30%. Oh, dude. Yeah. I mean, 30% is still
economy?
Nothing in this economy. Yeah. 30% is nothing to like, to wag your tail at. I don't know if I'm saying that right.
Don't wag your tail at that.
But it's crazy that, we were averaging 1,000% runner every 5 weeks. Like imagine, like you could only, even if you only held it for 10% of the move, you did 100%. Like that's crazy. And now we're seeing those same, so I looked at this one market cap, PHIO. So PHIO is trading at $1 and the market cap's right around 14 million. All right. Inside the last 2 years, that thing traded up to $150 million market cap. Now it's at a $14 million market cap. Like that's wild. Like but like this is just one of like 100.
Yeah, I mean, you think about like some of the altering. I mean, we haven't talked about it in a while, but with Bitcoin stocks or crypto stocks, Bitcoin stocks, some of those, they were at 18. I think it was EQOS was at $18 when Bitcoin was just passing 40 for the first time. Now Bitcoin's at 40 and EQOS is at $1.80. I mean, I remember one of my friends was saying, hey, the crypto plays maybe time to buy. They maybe bottomed out and I bought it and up 20% today. It's crazy. Like these Bitcoin plays are so low. Like there is just so many things to just, it just feels like the time to load and it's so easy to say that, but at the same time it's like, especially when you have something where you can be like, okay, I know this stock goes up with Bitcoin is here, this stock was here when Bitcoin was here, why is it at 10% of the price?
No, you're right. And okay, so I remember complaining about on the podcast Inside the Summer about GEVO being a $3 billion market cap. It's now sub $1 billion market cap. Like this is nuts. Like this thing was trading at like wow. I mean, it's just wild. This thing was trading at 15, almost $16. Now it's at $4 and it's a sub $1 billion market cap. Now GEVO should be a sub $1 billion market cap. I can say that with confidence, but it's just crazy that some of these things were just being killed. I mean, to the point to where like if we had a backed investor, you and PGIR, the LLC, could buy PHIO. Like that's the type of like beatdown that some of these stocks have gotten. Is that like the podcast with a backed financer could hostile take over some of these companies.
So if you guys think we should buy a SPAC, make sure to let us know in the comments and smash that like, subscribe. No, but no, it is wild to think about some of these stocks that everyone used to be on. It's like mine now. But no, yeah, but kind of as we go into our next segment on stop losses, because I mean, it is key to avoiding holding these from that 18 to the $1.80 or, all these downtrends, a lot of times we talk about stop losses in a sense that, hey, have them mentally and sell them when they get there. But, it's tough. It's easier said than done. I mean, there's so many times you see it get to your stop loss. I'll let it go a little bit lower. How much lower could it go? How much lower could it go? And then you just don't want to find yourself selling and then it goes up. But, in this market, you kind of have to force yourself to have discipline because, I mean, these downtrends are serious. These bloodbaths are real. So what do you kind of recommend for setting stop losses for, I guess, swinger hopefuls, ones that are hoping for the bottom, maybe, day traders that don't want to get a 7 million share sell on like you or, all the in between?
So I'll break this up into 3 different subsections. One being the day trader, the second one being the swing trader, and the third being the short seller. Because the third, I think, is the most unique, and I think it's also very different than the first 2. So with a day trader, I think it's super important that you pull up the daily, first 2 things. One, the relative volume. So when you're looking at it 30 minutes before market open, what's the relative volume at? In comparison to most days. Like if it's already trading double what the average volume is and it's up like 30%, that's a pretty good, like that one has a chance to really make some moves during the day, especially if it's like a smaller flow. But the biggest thing is that you're going to have to look on the 1 day, or what is it? The 1 year, 1 day chart and find out where those support and resistance points are. Because a lot of times what we're seeing is that these stocks are making a retracement back to, I don't want to say red, but a pretty big, like they'll go up 100% and then they'll only end the day up 30%. So the moves are happening, but we're not seeing those big ass squeeze outs where it's like one move at 9:30, another move at 10, another move at 11, another move at 1. Like that's not what's happening. It's usually like a pop, maybe 2 pops, maybe 3 max, and then it's like an all day fader. So first off, what you want to find is that where's that biggest resistance point? And then what you're going to do is that, you have to keep it in mind. And this is one of those things where I try and it's a common sense thing after you get it, but it's like not the easiest thing to get. Like I'm going to say this out loud and it's going to be like, yeah, no shit, Hugh. But in the moment, it doesn't feel that simple. If you see the VWAP, then, and it doesn't matter what indicators you use, the 9 EMA, the 20 EMA, the VWAP, any of that, the 200-day moving average. If all of that is if the price is starting to severely deviate from those moving averages, just know at some point they're going to catch up, whether it be from the short side. So, let's say the price is like 10% below the VWAP, or from the long side. Okay. It's one of those things where if things really start to deviate away from the moving averages, that's not a bad time to take some off. It doesn't even need to be like, oh, like my price target is 18. It's at 17.95. Let me wait till 18. No, it's one of those things where like, if you just see the price kind of running away from those VWAPs, I mean, the VWAP, the moving averages, especially the smaller timeframes, take some off. Just take some off. I promise you, at some point, the price is going to retrace back to those levels. And most of the time, it gives you an opportunity to load up maybe half of what you sold and churn around and trade around the core a little bit. So that's super important. And so as a day trader, I think that's really important. And then also the other thing is that you're going to want those key levels. So as we talk about a lot, is that the more times that something tests a key level, it's going to break it, whether that be support or resistance. So if it comes up to the resistance point and it first time, breaks back down, second time breaks back down, the third or fourth time, If it gets back up there, it's probably going to break out. Now, on the flip side, okay, if it gets all the way back down to support and it's, test support once, test support twice, test support 3 times, the 4th time it probably breaks down. So that's where you really got to get like, even though I'm not like a huge believer in like technical analysis end all be all, that's one of those times where if you can create, if the stock's creating higher lows, and even if it's not necessarily breaking out of that resistance, if it's creating higher lows, it will eventually break that wedge to the upside and give a really nice pop. So it's one of those things where you find out the key levels, you see what the trend is doing, especially on those bigger time frames, like the 5-minute, the 15-minute candles. That's where you can get an overall trend view. And then for swing traders, the biggest important thing, especially because I feel like a lot of people are looking for those bottom beatdowns, is that if you want to be a swing trader with bottom beatdowns, it has to be where like you start in super small. I'm talking like 1% of your account, and then just keep your stop loss at like the 52-week low or whatever. So if you're buying it like let's call it like $1, and and you feel like it's starting to curl back up, and the 52-week low is 90 cents or whatever. Fine, you lose 10 cents a share. You have 1,000 shares, fine. Like that's no big deal. That's a haircut. But if it starts to actually confirm back up, then when it breaks out of that downtrend and then it comes back down and retests it, because it always dips and retests, that's your scaling spot. But you don't want to get into one of those things where it's like, you're like, oh shit, like I'm having FOMO because now it's 10 cents from the low, and then you buy, and then the market goes down 3% in a week, and now it's at like 85 cents and you just got smoked. So, and all that little like pop was just shorts covering on a bigger, on the larger time frame. Like that's one of those like sticky messes. So just keep it underneath like on the close of the day. So that means that if the stock closes below the 52-week low, you just take your gains. And then for the short side, now this is in my experience, and this is how I handle it, but this isn't obviously going to be for everybody. When I'm short something, I have an overall confirmation. I don't want to call it confirmation, but I have an overall what's what I'm looking for? Conviction inside the trade. So Ford last week, Ford was up like 12% the day before, or maybe even that day. And so I had an overall conviction that it was going to take a dip at some point in the day. So when I felt like it was creating that exhaustion move, what I was starting to do was that I was just starting to get in there, like 1,000 shares short here, 1,000 shares short here, just kind of waiting for that key level, being that support zone, to break down. And so what I would do is that I would just kind of put on like 1,000 shares short, 1,000 shares short, 1,000 shares short. And then when it broke down, I think it was like 24.50 or something. When it broke down underneath 24.50 and then retested it, but instead, as we know, support becomes resistance, and it broke down again, that's where I scaled in. So on the short side, I have a lot more conviction, but I don't scale into the trade until it's confirmed. So that's the way that I like to handle it. Now, I had given that room to go to 27. So I was okay if Ford went to 27, because again, I wasn't going to scale in until it had proven that top was in. So my biggest loss would have been like, maybe $3 or $4 grand, something like that, maybe five or six max, let's call it. And so when I'm short, it's the overall conviction of the trade, because I feel like the price is already up so much, and at some point it's going to break down. And most of the time that comes from what we just talked about from the long side as a day trader, is that it's moved so far away from the technicals that I feel like there's no way they should be trading up here. So that's usually how the short side works for me. That's in my experience. It doesn't usually mean that's going to work for everybody, but that's the way that I like to do it. Now, the short side obviously is a little bit more dangerous, because if Ford had gone to like 100, I would obviously be out a good amount of money. But that's where, you keep that stop loss at 27. So I had a super small starter in. I had that stop loss at 27, And but I had the overall conviction on the trade. So that's where like the difference is from like the long side to the short side. The long side, you're anticipating a move up, which is a little bit more tricky, especially when it's already up so much. And the short side, you're anticipating a move down after it's already up so much. So they're similar trades. It's just kind of like if you come to a fork in the road, and you know the long side, it's basically like you come to the fork in the road, but the road is basically the stock being up 30%. And so when I'm short, it's like I understand that it could go left, but
yeah, usually the left lane's faster, but sometimes you get in the left lane, there's always a fucking jackass in front of you. So
yeah, you know
you
what?
get in
That's
the
good.
right
I like
lane,
that.
and then that guy's slow. Yeah, something like that.
Yeah, so that's the overall I'm trying to say is that the short side, it's more of like a big picture conviction trade, where the long side, it's more like, hey, this is creating higher lows. I feel like it can make a quick pop. I'm gonna try and make 5, 6, 7, 10%. Especially because on small caps, I don't really trust them from the long side, especially inside the market that we're in. So it's one of those things where like I want to make a quick 5, 6% on a key level break to the upside and call it a day, and then cycle my shares out.
All right, well, that'll about wrap us up for today. I would like to congratulate you on your Georgia Bulldogs winning their first championship in over 41 years.
Go Dogs!
So, big win for you. So congratulations to all of our dog fans out there, and sorry to all of our Crimson Tide fans out there. As an Auburn fan, I hate both
Maybe next
of them.
year.
Well, they win like every other year, so I mean, it's like whatever.
That's all right. The tide has turned. All we needed was one. That's all we needed.
There's your pun of the day. All right, guys.
Go Dogs!
Everyone have a great rest of your week, and let's see a lot of green. Take care, boys and girls.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.